Welcome back, VIP. In this video, I am continuing with the weekly market profile. Okay, this is another addition to what I mentioned in the last video for this module. Okay, Tuesday weekly high pattern and the overall weekly market profile. Okay, this particular lesson, I am also making it public for my YouTube community. Okay, also just a reminder for those in VIP, the live trade execution videos are down here. Okay, so I've added the trades for Friday. Okay, so let's look at the Aussie dollar. Okay, and this is one of the reasons why I have decided to make this particular video publicly available, because I started my entire career in trading with the Aussie dollar. Okay, that's what I started with. Now, there's a couple of things that I want you to note. Okay, these lines denote each day, and the day is within the ICT teachings, which is midnight open. Okay, that's the daily separator. Okay, so what I used to do is I used to trade the Aussie dollar from the weekly highs and the weekly lows, okay, because they are the most highest probability setups, okay? So when a market breaches its weekly high or its weekly low, that's when I get interested, okay? So here you can see that on Monday, we trade, and then on Tuesday, right, which typically forms the high of the week, okay? That's what's mentioned, okay, in our weekly market profile module here, Tuesday weekly high pattern. So you can see here, Tuesday, we mark the high of the week, okay? And that's when I get interested in the market, because not only has Tuesday marked the high of the current week, okay, but we've taken out previous weekly highs, okay? So what do we see here? Now, I'm not going to go into detail in regards to entry techniques. This is a overview, high-level video. But what we can see here on the hourly chart is we have two down candles, right, preceding an up move that takes out that high. So at this point in time, we've taken out a current high of the week and the previous weekly high, okay? Two down candles, when we take liquidity, become our bearish breaker. The large up candle becomes our bearish order block, okay? So you can see here on Wednesday, we come up into that bearish signature. Now, what do we see here below the market? We see relative equal lows, okay? So what I would be targeting is anything below this level, right? And what I typically would do is look for where is the inefficiency that the market might be reaching for, and we see this. Secondly, I want to be out of this trade, right, from taking a short. I want to be out of this trade by Thursday, because Friday will typically form that closing range of the week, and that's where Friday typically forms that TGIF trade mentioned by ICT, okay? So entry would be from that breakout. We're pushing up on Wednesday, okay, London session, right, into there. And as I said, equal lows, I'll be targeting that level there, okay, or maybe a weekly low, okay? And I want to be out of this trade by Thursday. So this here is Thursday, okay? And you can see we get into the target. I will be exiting right there, okay, inside of that fair value gap on the left-hand side there. And you can see Friday then trades up. This is why I typically exit my trades, if I'm short or long, on a Thursday, okay, because that will typically form that weekly range, right? Now, that's it. That's that short, taken only because we've taken out a previous weekly high. Okay, and this is exactly how I used to trade the Aussie dollar. Okay, this is what I started with. Now you can see that Monday opens, and what does Monday do? So Monday opens all the way up here, right? Pumps up. Okay, and it's basically pumping up into this premium fair value gap, right? But I'm not interested in any of that, right? Because I like to trade, when I used to trade Forex, I used to trade from high of the week, low of the week. Okay, they're the high probability setups. So Monday goes down and takes out what? Previous weekly low. That is what triggers my interest in this market. Okay, now time's important, right? Here we get an entry, okay, and you'll find something down here for an entry. Let's quickly look at a 15-minute chart very quickly. You can see there's a small little tiny fair value gap there on that Monday, right? So we moved up. This is after previous weekly low has been taken, okay, and time's important. What time's that? 9:30 p.m. How many times on my YouTube channel or inside of VIP lessons have I mentioned that my favorite time to trade the Asia session is 9:30 p.m.? So 9:30 comes into a bullish fair value gap, right? After taking out the low of the week, right at the right time, inside of Asia, perfect time to trade the Aussie dollar. So I would take that long, okay? And my target would be back up to high of the week, okay? So that's my target if I were to take a long here. Now, I don't trade Forex anymore, okay? So I didn't take this trade, but this is all in hindsight to teach you some basics around high probability setups and how the market makers utilize these weekly templates, right? So a few key things. Tuesday has formed the high of the week, okay? That's in line with the teachings in this lesson, right? Where I've shown you lots of examples on the euro, on the pound, lots of examples we went through in the last module, okay? And when we're trading from the high of the week or the low of the week, then they are high probability setups, okay? So if I were to take a long here, that would be my target, okay? Now, you can see that the market also has engineered buy side, okay? So let's draw these out so we don't forget. We had liquidity on the way down when the market formed the weekly high. It's always going to engineer liquidity in the opposing end if it needs to go back down there, right? It needs to go back down there because it has left some inefficiency that needs to be sorted out, okay? So now we're down here, we've taken out the weekly low, right? And prior to that, the market has left by side intact, engineered equal highs up here, okay? And high probability the market's going to want to go back up there to take that liquidity, right? But when I'm trading from the low of the week, my target's high of the week, okay? So we're going to move up, okay? And what do we have here? Monday, Tuesday, you can see Tuesday formed that same pattern that we had over here, right? However, Wednesday actually forms the high of the week, okay? So now we haven't taken out previous high of the week, but we have on Wednesday taken out current high of the week, okay? And where are we coming up into? We're coming back up into the original bearish signature, okay? So because that's a weekly high, right, I may take that as a short setup. This is in London. I'd only be targeting this inefficiency, right, or this inefficiency, okay? But I want to be out by Thursday again, right, because that Friday may form that TGIF. So if I'm trading this down, right, on this Wednesday, only because we've taken out current weekly high, right? So here, previous week, we took out the current weekly high and previous weekly high. Here, Tuesday formed a high, but Wednesday formed the high of that particular week. And in this case, we took out the current weekly high, not previous weekly high, but that's still valid. I will still take that short if I wanted to. My target would be this inefficiency or this inefficiency, so long as I get out on a Thursday. We can see on Thursday, we meet that objective. And again, Friday, we have that TGIF. Now, I'm not looking for this move from this to go down to this low of the week because my target is this weekly high, right? So I'm not looking for shorts to get down to there until this is taking out. Okay, so that's why I would only target that inefficiency or that inefficiency, and my time limit, time constraint would be that if I'm holding that short, I'd be out on Thursday, especially when we've met this objective. Okay, so Friday also takes out the previous daily low, just taps into it, right, just to take that liquidity before rising. Okay, so now this is all trading inside the range, right? We're still inside the bigger weekly range. It's important to look at where you are in relation to the overall weekly ranges, okay? So this whole price action is all inside of this weekly range, right? Now, I'm looking for that as a target. So I'd still be long here, right? There's no reason for me to take off my long targeting that particular high there, okay? In this hypothetical example. Now, I typically want to trade Aussie dollar at the Asia Times, right? So look at all this consolidation here. You got to take note of this. What's going on here? This is accumulation. Why is this accumulation happening there? Okay, why is it happening there? And it's all happening inside of this fair value gap. Okay, the reason it's all happening there is because we need to put another layer of lens on this chart. Okay, and that is the dealer's range. What's the dealer's range? It is the previous swing high, major swing high, and major swing low. That's our dealer's range. Okay, you can see this high's taken out that swing, right? Previous weekly high, and this move down has taken out previous weekly low. So that's our dealer's range. What I like to do is I like to grade my dealer's range with the quadrants and identify the midpoint, okay? Anything below midpoint, which is that yellow line, okay? 50% of that dealer's range is discount. Anything above that yellow line, which is the midpoint, okay, of this range, of the dealer's range, is premium. I then take discount and further divide it into two portions. So I get an extreme discount in that bottom portion, which is close to the low of the dealer's range, and just a standard discount, which is the upper portion of this entire discount of this dealer's range, okay? And the upper portion is extreme premium, and the lower portion above the midpoint is premium, okay? Now, what I want you to notice here is all the accumulation at this blue line, which is at or near extreme discount, right? All this accumulation, all the consolidation, look at it, all of it. Where do you see the majority of accumulation going on? All this consolidation, it's all here, right? Down here. That's where the institutions are getting in, okay? And notice that when we come down here, we're coming to this inefficiency, okay, to do some rebalancing. And we are basically, the institutions are, the algorithm is holding price, right? Giving opportunity to large fund traders and institutional traders and high frequency algorithms to accumulate positions at extreme discount, okay? So we have a new week. Again, the market's moving up Monday, creating liquidity, right? And giving opportunity for those large fund traders to accumulate at discount or extreme discount, right? This was the best buy once the low of the week was taken, right? In Asia on start of the week, okay? Now, there's opportunities to buy here, but if I look at the time here, this is midday. I wouldn't be interested there. This is 8 p.m. Yes, I may be interested there, but I'm not really looking to buy this market unless a weekly low has been taken. So my buy is down here, okay? But I may look to add, right? Again, this is 11 a.m., 1 p.m. Wouldn't be interested there. This is London. Wouldn't be interested there, right? This is now New York. I wouldn't be interested there because I want to be trading Asia time, right? If I'm trading the Aussie dollar, I want to be trading it in the Asia time, okay? So this is moved up, okay? Higher high. This is also a higher high from here. So we're making higher highs, okay? This is coming down into discount in terms of a 50 gap. Now this is 8 p.m. If I were to buy, if it wasn't long, then this is probably where I would buy because that's the Asia session. So there's no Asia entry here at extreme discount. That's all London, okay? This is all London, right? This is midday, no session time. This here is New York, maybe here, 8 p.m. if I got to set up, okay? This is coming into this inefficiency and therefore price should support there. And it's Asia, okay? And also Thursday caps the downside movement, right? If you look at how Thursday, as I said, that Friday forms, if I'm short, I want to be out of shorts on Thursday. So if I was short, Thursday I'd be out. So I'm happy to take a long here, okay? And looking for that as a target. Now, if I were to take a long here, and now it's Friday, I want to be out of that trade, right? Take profits at that high, okay, or close to it, and I want to be out, okay? I don't want to be holding this. Now, what's the market done here? Again, it has engineered liquidity, okay? So I would expect now this market to drop maybe into this inefficiency, right? Or this inefficiency, okay? So if I'm still expecting the weekly high to be taken out, and I want to be a buyer of this market next week, not a trade recommendation, okay? You're learning about price action and how to identify discount and premium levels and how to work with the weekly profile, okay? So this is all premium, right? Even if the market came down to that inefficiency on Monday, I would not be looking to accumulate a position. That is premium pricing, okay? Even if I'm of the view that from here, we go there, right? That price is too high for me, okay? So I would need price to get at least below the yellow line, which is midpoint. So I'll be looking for some kind of a discount PDRA for price to retrace back Monday, okay, or Tuesday, right? And then look at how price behaves at that level. But really what I would love to see, and for me to be interested in this, is for the market to come back down into extreme discount. Take out these equal lows, right? That'll be a weekly low for me, right? So under this, okay, so let's mark that out. Not saying that's what's going to happen, but that's what I would be interested in, okay? So that would be a weekly low. And also you can see on the left-hand side there, we have inefficiency, right, that the market may want to come back down into, right? And that's the current weekly low, okay? So I would not be interested in this, even that, because that's premium, right? Minimum for me is the market needs to come into this inefficiency, okay? That's discount, right? Because it's under the midpoint. And I would only, if I were to take a long, and if I saw a setup at the right time in Asia, I would only add a small position there. Basically, I would scale into a long. Really want to see this come below the previous weekly low into extreme discount, right? To then add a long position for a potential move back up through these equal highs, okay, and the weekly high, which is the current dealer's range high, okay? So just a short video to talk about a few key concepts. Tuesday typically forms the high of the week. So we may see Monday trade, okay, and maybe go lower, right? So Monday, and then Tuesday may take out the Monday's high. We may take out this, right, and then go lower. Or we could just open Monday and continue and reach this objective, which would mean there's an opportunity, right, to accumulate. Obviously, those who have accumulated from a previous weekly low would love that, okay, because they're at extreme discount and now at premium, okay? So just to recap, Tuesday typically will form the high of the week, right, as we can see here. And if we are taking a short position, we want to be out of those shorts by Thursday. We want to identify liquidity pools, and we want to have targets below those liquidity pools. Look for inefficiencies on the left-hand side where the market might be reaching for, or higher time frame liquidity pools like low of the week, like here. We want to look for extreme discount to accumulate our long positions at the right time. This is 9:30 p.m. for this market. That's the right time. And the market is coming into a discount. If you look at a 50-minute time frame, you see a bullish 50 gap there. And then you want to be targeting equal highs, right? Your target should be above these equal highs. So look at where the market's engineered highs, right? Or previous weekly highs. Again, look for Tuesday to form the high of the week. If you're long, you may want to take partials or exit. Okay, look for the next opportunity, right? So here, this is all consolidation, and it's all within side of the weekly range. And you kind of want to avoid trading this chop, okay? Notice where the accumulation is, right? So just recapping, it's at the extreme discount levels, okay? So accumulation should be minimum in discount zone, right? Which is that yellow line, okay? So as I said, if we come back to this inefficiency on a Monday, I would not be looking to long, right? Even though there's equal highs here and a higher time frame liquidity pool. need to get back at minimum below this for accumulation. Ideally, back at extreme. There's also this consolidation. I don't think we'll get down to these levels, but I'm just marking them out for you to study this chart next week and see how this chart moves around in terms of its price action. Okay, so this is for your study. So I want you to look at how this market evolves next week. Where does it come down to? Does it come down to this inefficiency and go back up, right? Or into this inefficiency, which is discount, right? Or does it take out this liquidity, previous weekly low, and come into extreme discount and offer some kind of a setup for accumulation to long positions to target the weekly high? Okay, so hope the video is useful. You've got to go back, you've got to study your charts and mark out your daily ranges, liquidity pools, inefficiencies, high of the week, low of the week, right? The dealer's range also very important because that's going to show you where smart money is getting in. It's going to be around the extreme discount level, right? Okay. Also notice accumulation here at midpoint, right? So there's only two levels of accumulation on this chart, and they are both at key areas of the dealer's range. Okay, at extreme discount and where the risk consolidation at the midpoint, and that's what you'll find. Okay. Hope the video is useful. I will now talk with you in a future video.